Welcome everyone. Today we delve into the world of high dividend ETFs, focusing on four top performers: KBWY, XSHD, NUDV, and DIV. Let's start with the basics. What are exchange-traded funds, or ETFs, you might ask? Picture a basket, but instead of carrying fruits or vegetables, this one carries stocks, bonds, or commodities. An ETF is this basket. It's a type of investment fund that trades on a stock exchange, much like individual stocks. This means you can buy and sell ETFs during the trading day at prices that fluctuate based on supply and demand. Now, the appeal of ETFs lies in their versatility and accessibility. They offer a way to diversify your investment across many different assets without needing to buy each one individually. Plus, ETFs generally have lower expense ratios compared to mutual funds, making them a cost-effective choice for many investors. So, what's the deal with high dividend ETFs? Well, these are a specific type of ETF that focuses on stocks that pay out dividends. Dividends are a portion of a company's earnings distributed to shareholders, often in the form of cash or additional shares. High dividend ETFs specifically target those companies known for their generous dividend payouts. Why might an investor be interested in these? Dividends can provide a steady income stream, making high dividend ETFs particularly appealing to income-focused investors such as retirees, but they're not just for those nearing retirement. Younger investors might also be drawn to these funds as a way to reinvest dividends, capitalizing on the power of compounding to grow their wealth over time. Today, we're zoning in on four high dividend ETFs that have been turning heads: KBWY, XSHD, NUDV, and DIV. Each of these funds has its unique strategy and focus, offering a variety of options depending on your investment goals and risk tolerance. Let's gear up to uncover the potential of these four high dividend ETFs. Hello viewers, if you are enjoying this content and you do not want to miss future videos filled with even more tips, tricks, and inspiration, hit that subscribe button now to stay tuned with us, and remember to comment and share. First on our list is KBWY, the Invesco KBW Premium Yield Equity REIT ETF. This particular ETF, or exchange-traded fund, is a fascinating one. KBWY is focused on what we call small and mid-cap equity REITs. Now you may be wondering, what does that even mean? Well, let's break it down. REITs, or real estate investment trusts, are companies that own or finance income-producing real estate. They're a way for investors to own real estate without having to go out and buy a physical property. And when we talk about small and mid-cap, we're referring to the market capitalization of these companies. Small and mid-cap companies have a market value of between $2 billion and $10 billion, sitting right in the middle of the pack. So, the Invesco KBW Premium Yield Equity REIT ETF is a fund that invests in these smaller, yet still substantial real estate companies. And the key word here is premium yield. This fund is particularly known for its high dividend yield. Now, why is a high dividend yield so important? It's like getting a paycheck just for owning the fund. The companies that make up KBWY are profitable enough that they can return a portion of those profits back to shareholders in the form of dividends. And the higher the yield, the bigger that paycheck. The beauty of a high dividend ETF like KBWY is that it can provide a steady stream of income. Whether you're looking to supplement your income, grow your investment portfolio, or even fund your retirement, high dividend ETFs like KBWY can be a key player in achieving those financial goals. So there you have it, KBWY, the Invesco KBW Premium Yield Equity REIT ETF, a fund that's focused on smaller real estate companies with a high dividend yield that can provide a steady stream of income. Keep KBWY in mind as we move on to our next high dividend ETF. Next up is XSHD, the Invesco S&P Small Cap High Dividend Low Volatility ETF. Now let's delve into the world of XSHD. What makes this ETF stand out, you may ask? Well, XSHD is unique in its focus on low volatility small cap stocks with high dividends. This is a distinctive combination that offers some interesting opportunities for investors. To begin with, let's discuss the structure of XSHD. This ETF is designed to track the performance of the S&P Small Cap 600 Low Volatility High Dividend Index, which is comprised of 60 of the least volatile high dividend yielding stocks in the S&P Small Cap 600. This means that XSHD is composed of a diversified portfolio of small cap stocks that are less likely to exhibit large swings in price. But what does this mean for investors? The key here is the focus on low volatility. Low volatility stocks tend to be more stable and less risky. which can be appealing to investors who are looking for steady returns. On top of that, XSHD's focus on high dividends means that investors can potentially enjoy a steady stream of income from their investment. Now, let's talk about the high dividend yield of XSHD. As of the end of last year, XSHD had a dividend yield of just over 4%. This is considerably higher than the average dividend yield of the S&P 500, which makes XSHD an attractive option for income-focused investors. But the benefits don't stop there. Because XSHD invests in small cap stocks, it also offers investors the potential for significant growth. Small cap stocks often have more room to grow than their large cap counterparts, which can result in higher returns for investors. In conclusion, XSHD provides an intriguing blend of low volatility and high dividends, making it an attractive option for investors seeking a stable source of income with the potential for growth. With XSHD covered, let's move on to our third high dividend ETF. Our third ETF is NUDV, the NUDV ESG Large Cap Value ETF. Diving into the world of exchange-traded funds, NUDV stands out as a unique player. As the name suggests, this is no ordinary ETF. NUDV primarily focuses on large-cap stocks with a value orientation. Now, what does that mean? Simply put, large-cap stocks are shares in corporations with a market capitalization value of more than $10 billion. These companies are typically industry leaders and are considered to be less risky investments. The value orientation of NUDV implies that it gravitates towards stocks that appear to be undervalued in the market. These stocks are often overlooked, yet they have potential for substantial growth. So, NUDV essentially hunts for diamonds in the rough. And who wouldn't want to invest in such a promising proposition? But there's more to NUDV than just large cap value stocks. This ETF is committed to ESG principles. ESG, or environmental, social, and governance criteria, are a set of standards that socially conscious investors use to screen potential investments. Companies adhering to these principles are considered to be more sustainable in the long term. Hence, by investing in NUDV, you're not just investing in potentially undervalued large cap stocks, but also supporting companies committed to a sustainable future. Now let's talk dividends. After all, that's what we're here for, right? NUDV has a high dividend yield, making it attractive to investors seeking regular income from their investments. Dividends are a portion of a company's earnings that are distributed to shareholders. A high dividend yield indicates that you'll receive a higher dividend relative to the price of the ETF. In a nutshell, it's more bang for your buck. In conclusion, NUDV offers a unique proposition to investors. By focusing on large-cap value stocks and committing to ESG principles, it provides a sustainable investment option. Add to that a high dividend yield, and you've got an ETF that's hard to ignore. With NUDV under our belt, let's turn our attention to the final high dividend ETF on our list. Our final ETF is DIV, the Global X Super Dividend US ETF. Now, DIV is a bit of a standout in our lineup of high dividend ETFs, and here's why. This ETF is composed primarily of high dividend yielding US securities. When we say high dividend, we're talking about companies that pay out a larger portion of their profits back to their investors. This is a key trait that makes DIV a top choice for those with a laser focus on dividends. So, what does the composition of DIV look like? Well, it's a diverse mix of sectors, including real estate, consumer discretionary, and utilities, among others. This broad sector exposure provides a balanced portfolio, which is an attractive feature for many investors. It's a bit like having your cake and eating it too. You get the high dividends without putting all your eggs in one sector basket. The focus of DIV on high dividend yielding U.S. securities is another aspect that sets it apart. The U.S. market is known for its stability and growth, and by focusing on this market, DIV offers a certain level of security for your investments. It's like having a safety net, ensuring that even if one sector takes a hit, your investment is spread across many others. Now let's talk dividends. DIV has a high dividend yield which is music to the ears of any dividend-focused investor. The dividend yield is essentially the amount of money you get back in dividends for each dollar you invest. So the higher the yield, the more dividends you receive. It's like getting more bang for your buck. So, why is DIV a top choice for dividend-focused investors? It's simple. The combination of diverse sector exposure, focus on the stable U.S. market, and high dividend yield makes it a compelling option. It's as if you're getting the best of all worlds. high returns, stability, and diversity. Now that we've covered all 4 ETFs, let's recap what we've learned. We've journeyed through 4 high-dividend ETFs, each with its unique features and advantages. Let's take a moment to reflect on our journey. We started with KBWY, a compelling ETF for anyone looking to invest in real estate. It focuses on small and mid-cap equity REITs, offering a high yield and a unique opportunity to tap into real estate markets that may not be accessible through large-cap indexes. It's a niche within a niche, providing a distinctive approach to real estate investing. Then we dived into XSHD. This ETF is a great option for investors seeking exposure to high dividend yielding U.S. equities. It offers a diversified portfolio by investing in the highest dividend yielding U.S. stocks that are less volatile than the broader market. This strategy of focusing on high yield, low volatility stocks can offer a smoother ride for investors in turbulent markets. Our third stop was NUDV, an ETF that offers a unique blend of dividend income and potential for capital appreciation. This ETF focuses on high-quality dividend-paying companies in developed markets outside the US and Canada. It employs a quality dividend growth strategy that aims to find companies with the potential for strong, sustainable dividend growth. So, for those seeking international exposure with a taste for dividends, NUDV may be worth considering. Finally, we explored DIV, an ETF that targets high dividend equities across multiple sectors. It provides a diversified exposure to high dividend yielding stocks in the US, making it a potential choice for income-focused investors. It's an appealing option for those who want to avoid putting all their eggs in one sector's basket. Each of these ETFs offers a unique approach to investing, catering to different investor needs and risk appetites. They all focus on high dividends, but their strategies vary, offering a range of choices for investors. KBWY taps into niche real estate markets, XSHD provides a low volatility approach to high-yield U.S. stocks, NUDV offers international exposure with a focus on dividend growth, and DIV provides broad sector diversification with a focus on high-yielding stocks. But remember, while high dividend yields can be attractive, they're not the only factor to consider when choosing an ETF. You also need to consider your investment goals, risk tolerance, and time horizon. And of course, it's crucial to do your own research or consult with a financial advisor before making any investment decisions. So, there you have it, a whirlwind tour of 4 high-dividend ETFs. Whether you're looking for exposure to real estate, international markets, or a more diversified approach, these ETFs offer some compelling options for your portfolio. Remember, investing in high-dividend ETFs can be a great way to generate steady income. Do your research and find the right ETF that fits your investment goals. We hope you found this exploration of high-dividend ETFs informative and engaging. Indeed, the world of investing can seem complex and daunting, but it's through understanding and knowledge that we can navigate it more confidently. It's been a journey, hasn't it? A journey into the world of KBWY, XSHD, NUDV, and DIV. 4 high-dividend ETFs, each with their unique strengths and opportunities. These are just the tip of the iceberg, a small sampling of the vast array of financial instruments available to the discerning investor. Remember, knowledge is power, and in the world of investing, it's your greatest asset. So let this not be the end of your quest for knowledge. Instead, let it be the start. Delve deeper into the world of high-dividend ETFs. Research, ask questions, seek advice, understand the risks, and make informed decisions. The road to successful investing is paved with curiosity and a thirst for knowledge. In the same vein, let's not forget the power of community. Share your insights, your questions, your fears, and your victories with others. Investing is not a solitary journey. It's a shared adventure, a collective pursuit of financial freedom and prosperity. So, why not start by sharing this video? Pass on the knowledge. Let others benefit from what you've learned today. Let's create a community of informed investors united in our pursuit of financial success. And of course, to stay updated on the latest in investing, to continue this journey of knowledge, make sure you subscribe to our channel. Hit that like button if you found this video helpful, and don't forget to share it with your network. We're here to support you on your investing journey, providing you with the insights and information you need to make confident investment decisions. Don't forget to subscribe, hit the like button, and share this video with others interested in high-dividend ETFs. Stay tuned for more insightful videos on investing. Until next time, happy investing.